Coinbase, the largest cryptocurrency exchange in the U.S., recently experienced a significant security breach in which hackers bribed overseas support agents to access sensitive customer data. The compromised information included names, addresses, phone numbers, and partial bank account details, although passwords and private keys were not affected. The attackers demanded a $20 million ransom, which Coinbase has refused to pay. Instead, the company is working with law enforcement and has offered a $20 million reward for information leading to the arrest of those responsible. The breach is expected to cost Coinbase between $180 million and $400 million to address, impacting its stock price, which fell by over 6% in morning trading. This incident occurs at a crucial moment for Coinbase, as it recently announced a strategic acquisition to enhance its global presence and is on the verge of joining the S&P 500 index. The breach highlights the persistent cybersecurity challenges within the cryptocurrency sector, raising concerns about data protection and the potential effects on market sentiment and consumer trust. In response, Coinbase has terminated the involved employees, alerted affected customers, and enhanced its fraud monitoring systems. The company has also committed to reimbursing impacted customers and strengthening its security measures. This incident is part of a broader trend of increasing cyber threats in the crypto industry, with significant financial implications, as reported by blockchain analysis firm Chainalysis. The situation underscores the critical importance of robust cybersecurity practices in safeguarding digital financial platforms.
President Donald J. Trump has announced a landmark economic exchange agreement with the Qatar government valued at over $1.2 trillion as per a White House press release. Central to this deal is a $96 billion transaction involving the sale of Boeing aircraft and GE Aerospace engines to Qatar Airways. The airline has committed to purchasing up to 210 wide-body aircraft from Boeing, marking the largest wide-body order in Boeing's history, including a significant number of 787 Dreamliners. Simultaneously, Qatar Airways has expanded its collaboration with GE Aerospace by committing to over 400 engines, setting a record for GE's largest wide-body engine purchase. In addition to aviation, the deal includes significant defense agreements. RTX Corporation's Raytheon has secured a $1 billion deal for counter-drone capabilities, making Qatar the first international buyer of its FS-LID system. General Atomics has also signed a $2 billion agreement for the MQ-9B remotely piloted aircraft system. These transactions are expected to generate substantial investments in American manufacturing, aligning with the U.S. administration's goals to boost domestic production and economic growth. The broader implications of these deals may enhance U.S.-Qatar relations and potentially influence defense and aviation market dynamics globally.
U.S. equity futures are experiencing a downturn as investors take profits amidst concerns of an economic slowdown, influenced by Steve Cohen's prediction of a 45% chance of recession. The S&P 500 futures are down 0.4%, while NASDAQ futures have dropped 0.5%, with tech giants like Nvidia, Palantir, and Tesla experiencing early losses. Investors are keenly awaiting retail sales data, which are anticipated to show stagnation, alongside other economic indicators like PPI and jobless claims. These figures, in conjunction with Federal Reserve Chair Jerome Powell's upcoming speech, are pivotal for gauging the U.S. economic trajectory and inflation outlook. In corporate news, Walmart's robust earnings report provided a brief respite, boosting its shares by 2.4% pre-market, despite warnings of potential price increases due to tariffs. Meanwhile, Alibaba's shares fell 5.6% following lower than expected revenue, highlighting challenges in its international e-commerce and logistics sectors. Energy markets reacted to geopolitical developments, with Brent crude falling over 3% amid speculation of increased supply from Iran. The broader implications of these events underscore the market's sensitivity to economic data and geopolitical shifts, setting a cautious tone for investors navigating potential headwinds in global trade and economic growth.
OPEC's latest Global Outlook report reveals that India's oil demand is set to surpass China's growth rate in 2025 and 2026, with a projected increase from 5.55 million barrels per day (BPD) in 2024 to 5.74 million BPD in 2025, marking a 3.4% rise. This growth trajectory is expected to continue into 2026, with an anticipated 4.3% increase to 5.99 million BPD. In contrast, China's oil demand is forecasted to grow at 1.5% in 2025 and 1.25% in 2026. Despite India's faster growth rate, the U.S. remains the largest oil consumer, with a demand of 20.5 million BPD in 2025. The report underscores India's robust economic expansion driven by consumer spending, investment, and government support, which are expected to sustain strong oil demand. The report highlights that diesel will continue to be the primary driver of India's oil demand, supported by extensive road expansion projects boosting bitumen consumption. Additionally, growth in transport fuels and petrochemical feedstock requirements are anticipated to bolster overall demand. In March, India's crude imports reached a record high of 5.4 million BPD, with Russia accounting for 36% of these imports, followed by Iraq and Saudi Arabia. The report also notes potential impacts from recent U.S. tariffs on India's GDP growth, although these may be mitigated by fiscal and monetary measures. Overall, OPEC's outlook suggests a positive trajectory for India's oil demand, reflecting strong economic dynamics and ongoing industrial activities.
CoreWeave, CRWV, has reported an impressive revenue growth of over 400% in its first earnings release since going public in late March. The AI cloud software company announced Q1 2025 revenues of $982 million, significantly surpassing analysts' expectations of $860 million. Despite this remarkable top-line performance, CoreWeave reported a loss per share of $1.49, which was wider than anticipated. The company's operating margin fell to -3%, a 12 percentage point decline from the previous year. Nonetheless, investors responded positively, with the stock rising about 6% in after-hours trading, reflecting optimism about CoreWeave's rapid growth trajectory. CoreWeave's substantial revenue growth underscores strong demand for GPUs in the tech sector, driven in part by its major customer, Microsoft, which accounted for 62% of its 2024 revenue. This heavy reliance on Microsoft presents both opportunities and risks, as the company aims to diversify its customer base to mitigate potential revenue concentration risks. The upcoming earnings call is expected to provide forward-looking guidance, which could further influence investor sentiment, as CoreWeave navigates the challenges of maintaining its growth momentum while reducing customer concentration. Its performance in the coming quarters will be pivotal in determining its long-term market position.
The Caribbean economies are currently outpacing their Latin American counterparts, as highlighted in a recent World Bank analysis. This economic resurgence is primarily driven by a robust rebound in tourism and significant oil-driven growth in Guyana. Countries like Barbados, St. Lucia, and the Dominican Republic have not only returned to pre-pandemic GDP levels, but have also seen tourist arrivals reach or surpass pre-COVID-19 figures. This signals a stabilization in the tourism sector, while Guyana's continued GDP growth, fueled by its burgeoning oil industry, marks it as one of the fastest-growing economies globally. Inflation trends in the Caribbean also present a contrast to Latin America, with the region benefiting from currency pegs that mitigated the inflation spikes of 2022 to 2023. Countries like Jamaica and the Dominican Republic, operating under inflation-targeting regimes, faced more severe inflation pressures, but have since seen stabilization. Jamaica's Economic Program Oversight Committee, EPOC, has been lauded for ensuring fiscal transparency, serving as a potential model for the broader Latin American and Caribbean region. Additionally, Barbados and Belize have made significant progress in reducing their debt-to-GDP ratios through ambitious fiscal reforms, demonstrating strong fiscal discipline and resilience. The World Bank's positive assessment positions the Caribbean as both a leader in economic recovery and a source of policy inspiration for the region.
United Health Group, NYSE UNH, has experienced a significant stock decline, with its value plummeting over 43% year-to-date, amid broader market stability as indicated by the S&P 500 index. This downturn is largely attributed to investor concerns over potential Department of Justice DOJ probes and subsequent guidance cuts. However, some analysts argue that the sell-off is excessive, suggesting that the current stock price reflects a worst-case scenario that may not materialize. Historical patterns from similar situations with companies like Supermicro, SMCI, and NVIDIA, NVDA, indicate that stocks often rebound sharply once initial panic subsides. Despite the uncertainty, United Health remains fundamentally strong and is considered undervalued compared to its sector peers. Analysts like Daniel Sereda, who rate the stock as a buy, anticipate a recovery as regulatory fears diminish and market conditions stabilize. The potential impact of this situation includes a possible rebound in UNH's stock price, which could benefit investors willing to weather short-term volatility. Overall, while the DOJ probe looms as a risk, the company's solid fundamentals and historical recovery trends offer a more optimistic long-term outlook.
In May 2025, the cryptocurrency market is witnessing a notable shift as investor interest in meme coins like Shiba Inu, SHIB, and Pepecoin, PP, cools, with attention turning towards utility-focused tokens such as Unilabs. Unilabs, an AI-powered asset management protocol, has emerged as the most searched cryptocurrency this month, drawing interest due to its focus on real utility and innovation. The platform offers features such as diversified asset baskets and multi-strategy AI execution, which allow investors to navigate market trends without extensive personal research. This approach is attracting investors seeking more substantial returns than those typically offered by meme coins. The decline in SHIB and PP highlights the volatility and sentiment-driven nature of meme coins. SHIB has seen a year-to-date decline of over 32%, with technical indicators suggesting mixed signals of buying and selling pressure. Meanwhile, PP, despite a recent 86% increase in value over 30 days, faces similar technical ambiguities, with market sentiment remaining neutral. As a result, investors are pivoting towards Unilabs, which, despite being in its pre-sale phase, has already raised over $200,000. This shift underscores a growing preference for cryptocurrencies with tangible applications and robust technological underpinnings, potentially setting a new trend in the market's evolution.
The primary financial event highlighted is the slowdown in U.S. retail sales in April, which rose by a mere 0.1% compared to March's 1.7% increase. This deceleration follows a spending surge in March as consumers rushed to purchase goods ahead of new tariffs, particularly in the auto sector. The tariffs, part of President Donald Trump's broader trade policy, have led to increased costs for imported goods, prompting retailers like Walmart to announce inevitable price hikes. This move by Walmart, a major player in the retail sector, underscores the widespread impact of tariffs on consumer prices and inflation, as companies typically pass the additional costs on to consumers. In response to these economic pressures, the United Nations has adjusted its global economic growth forecast downwards to 2.4% for this year, citing the adverse effects of heightened U.S. tariffs and escalating trade tensions. This revised outlook reflects broader concerns about rising production costs and potential supply chain disruptions, which could exacerbate financial instability across global markets. The UN's cautionary forecast signals potential challenges for businesses and investors as they navigate an increasingly uncertain economic landscape. Additionally, the resumption of Social Security garnishments for older Americans with outstanding student loans marks a significant policy shift, potentially affecting the financial stability of many retirees. The Consumer Financial Protection Bureau notes a dramatic increase in the number of Social Security beneficiaries facing garnishments, reflecting the growing burden of student debt among older demographics. This policy change could have broader implications for consumer spending and economic growth, as affected individuals may need to adjust their financial plans to accommodate reduced income.
Aviva, a leading FTSE 100 insurance company, has reported a 9% increase in general insurance premiums, totaling £2.9 billion for the first quarter of 2025. This growth was significantly driven by the acquisition of Probitas, an underwriting syndicate, which allowed Aviva to re-enter the prestigious Lloyd's of London market after a 20-year hiatus. The acquisition has bolstered Aviva's presence in both personal and commercial insurance lines, with premiums rising by 12% in the UK and Ireland. Additionally, Aviva's strategic purchase of AIG's life insurance business has contributed to a 19% increase in protection and health sales, while retirement sales have seen a modest 4% rise, supported by favorable interest rates enhancing annuity sales. In a parallel development, Aviva's proposed £3.7 billion acquisition of Direct Line is under scrutiny by the Competition and Markets Authority, CMA, which is assessing the potential impact on market competition. If approved, the merger would position Aviva as a dominant force in the UK's home and motor insurance markets. The company's shares have responded positively, climbing 2.3% to 585.4 pence, cumulatively rising 22% this year. CEO Amanda Blanc remains optimistic about Aviva's growth trajectory, emphasizing the company's robust balance sheet and customer-focused strategy. The CMA's decision, expected by July 10th, will determine whether Aviva can proceed with its strategic expansion, potentially reshaping the competitive landscape of the UK insurance sector.